Good morning, everybody. Good morning. It is Taco Tuesday, November 22. 2 more days until you can stuff your face with all the food you could possibly get your hands on. Thanksgiving. I envy you guys that get to go through the whole smelling orchestra of all the food cooking in the kitchen there. It's almost impossible to get turkey here. And when you do, it's not even worth it. So, anyway, happy Tuesday. Want to go backwards and then go forwards, and I'm going to really focus on the QQQ today because I want to point a couple of things out just to clarify in a wider picture what I'm kind of seeing and what I'm kind of anticipating. So, anyway, going over yesterday, it was 7:17, 2 hours before the open, when I was posting those trades, same ones I put in the email. 3900, 3905, 3925, 3930. We were bullish. So what we were doing was we were selling the put spreads, expecting that we were going to get a higher than 3930 close. And again, worked out. Unbreakable ranges. I definitely want to point this out, and I'm going to cover this before we go on to the charts. Ranges have been under 50 points, so you've got to monitor these edges if we're pressed on them. But again, opening up, bam, 40. I got filled at $1.60. And then I posted there a few minutes later, Friday's low for the patient is 39.35.98. And what happened yesterday was right over here, going into noon, going into 12 o'clock, we got that flash right down there to 39.33, 39.34, 39.33.34. And then immediately bounced back up off of it. And where that flash came from was this here, what I kind of went into a little bit yesterday at the end of the video and then didn't want to waste anybody's time, was this big 76.89 pivot down here on crude. It's the 50 retracement from the all-time highs down to the COVID lows. And right here, 8:30 in the morning, we started selling off because the Wall Street Journal reported Saudi Arabia and OPEC had agreed that they were going to start increasing production by 500,000 barrels a day. And right here, where we had our low, after we broke through that major pivot, Saudi Arabia came out and said, no, we're not. And we don't talk about that stuff. And that was where we got this little shake over here on the SPX and then got that recovery. And as we moved right to the penny to that 39.50.80, had that little bit of a dip and then re-energized because it's a very, excuse me, I apologize. It's a very, very low energy holiday week. Got that little bit of a dip, went back up there, revisited up to the high, still have that gap to fill from Friday, and then just trolled that 39.50.80 for the rest of the day. Worked out perfectly. We got ourselves a nice 47% from my entry on that 39.25, 39.30 put spread. Going to be looking at something very similar today, but with a little bit of caution and a little bit of patience, and I'll show you why. First of all, we have here Fed Mester speaking at 11 o'clock in the morning. 11 o'clock in the morning. And then at the end of the day is Bullard. These are the two most hawkish, bear Mongo fearing speakers that the Fed has. And again, with it being Taco Tuesday, I'm a little bit cautious about getting involved in any kind of a put spread, even though it does very clearly look that we are on a very good support level because it is Tuesday. Again, yesterday, right there, 47% return. Greens are all over the place. When there's reds, the reds are there because of reasons. We had CPI over there on the 10th. We had this day here where, again, on October 28th, I mentioned I was being a little bit cocky on that day. That was the day after the GDP. That was the Friday after all the earnings came out. That was the day where we ran and ran and ran and ran. That wasn't the day I was being cocky. This was the day I was being cocky, back over here on October 14th, where I decided after having already played on the call side, okay, I'm going to go play the put side, and it fucking completely threw up in my face. But yeah, It is a very well working process, very well producing, much better than the 5% that I sought out for when I got involved and started on this to share it with you guys, because this is the way that I've traded my clients for a few years. This is it's your bread and butter, guys. It's your bread and butter. It will constantly grow for you. But so what I want to go on to here, and I'll show you really quickly, is weight. Okay, the S&P companies by weight, and this is over by Slick Charts. It took me a while to find it, but I finally found it, and they update it. And what you've got here, you've got your weight, you've got your Apple, your Microsoft, your Amazon, Google, Berkshire Hathaway's number 5, Google again, United Health, Tesla number 8, ExxonMobil. Forget about Johnson Johnson's garbage, but Nvidia number 12. So you've got a lot of the names that you're already familiar with because you're trading it quite often. Here's the NASDAQ 100 by weight. Apple, top weight, 13.6% QQQ. Microsoft, Amazon, Google, Tesla, Nvidia. Together, those 7 make up almost 50% of QQQ. So this is why when somebody's asking me, hey man, what about Tesla this? Hey, what about this? Apple's a very cheap option. It's the number 1 traded. It's the highest volume option out there. I'll never deter anybody who wants to trade Apple. But when you're going out there and you're looking at stuff like your Teslas and your Nvidias and your Googles, and you just as well off taking on QQQ, because QQQ is all of them mixed together in a big fucking punch bowl. So want to go over those. I want to go back here and look here. This is the NQ, the NASDAQ futures. And again, you can kind of just see here over 30 days, we're just slowly trolling up. Very, very slowly trolling up. And over here, what is this? This is October 13th. Let me zoom out to make sure I'm right. Yeah, October 13th. So that is our all-time lows, or not our all-time lows, our 2022 lows. But that's where we're at, right down there, right at that 10,484. And we've run up here to 12,118. This is the 50 retracement here coming from the August highs. Now, the August highs was SPX 4325. Now, bring you backwards to bring you forward. We bottomed here on October 13th at 34.91. We're now trading over here at 39.49. 34.91, 39.49. That's a 500 point move on the SPX. Come back over here on the NASDAQ, on the NQ, you're trading right here at 11.58. You're up nothing. You're up nothing. And again, that's why I want to point onto this and show you here and go through the names. Apple. We're going to go on a 90-day, and I hope, well, it is detailed. Nothing I can do about it. This is your 90-day Apple chart. You're looking here where your bottom was in October, and you're looking where we're at here, how we're trolling so closely low down to where we are. This is your number 1 weight on the SPX and on the NASDAQ. So again, look at where we are as compared. You know, this is 43.25 on the SPX right up here. We're all the way down here. Amazon. I might be out of order, but it's the same idea. Amazon. You got Black Friday coming up at the end of the week, and here's Amazon pushing on the year lows. Microsoft. Microsoft's really boring. Really boring. But again, Microsoft just trending here, right in this main level, off of the main lows from earlier in October, and just hanging on over here at this resistance level at 247.70. You can see already, if you can break through this 248 area, your next resistance level is going to be up here around that 265. Google, another one. You know, here's Google fading on that resistance 35% from the all-time highs, right around $100, and fading down here in what looks like, in a zoomed in fashion, a little bit of a bull flag. But again, You've got this descending little wedge happening here, just like you had over here. You've got your 1, 2, your 3. This could be your 4 coming right there to where support was before, and then your 5 taking you up here. So, again, these are what you're looking at when you're looking at your weight. And, here's NVIDIA. NVIDIA, this is a completely cleaned up chart that I've got that I was drawing on that, having come off of that. And here, it's still trending in this channel, and you still need to call this a bullish channel. But you come over here on the detail, and you're trending right over here on this main high. You're right above the September 2020 highs. And again, same thing. Still looks to be one of the more productive ones out there. And again, bringing you back to everybody's favorite, because everybody's got something to say about Elon Musk. New lows. New lows over here on Tesla for the year. And where Tesla is just, it might as well be Bitcoin. It's just absolutely destroying everybody out there. And since it kicked off that 313 area, it's just done nothing but crater to the downside. But if we come over and start looking at it from a technical point of view, Tesla, forget the hourly, we want to go wider. Here's the weekly. And zoom it up. Here's your weekly. As oversold as you've been in the worst of times. Oversold on your weekly, incredibly oversold. Here's your daily. On your daily, you've got a buy divergence sitting here on the RSI. Now, come on to a little bit more zoomed out. Here's your 12 hour. Your 12 hour, you've got a buy divergence here on your RSI. And you come out and go to your 6 hour, coming off of an extreme oversold low. So, again, it's not that it's telling you, anything specific other than a big broad stroke of be very, very cautious about being bearish at this particular moment as we're heading into this shortened holiday week, the beginning of December, the end of the year rally with Santa Claus, the FOMC meeting that's coming up in the middle of December. I still like the looks of how this all plays out, that how we've come here. Let me pull you onto a cleaner chart. How the QQQ has come down here, wrestling with that little 280 level, right on this falling resistance line that I'll zoom out and show you, and how that 286, your 50% retracement from the COVID lows, is a major contributor to that upside part. I like the look of this as to getting the opportunity to be breaking back up above that 286 level as we head into the end of the week. More importantly, as we head into the start of December, and we'll track things from there. From a very wide point of view, with the 100-day moving average being up here at 292 and having already kicked off that 294.50 retracement off of the August highs back when we had that rally a week ago on the 15th. I like this to slowly continue grinding up into that 300 level, possibly by the end of the year. Definitely by the first couple of weeks of January into when we start getting the earnings reports. But again, I'd be very, very cautious on the bearish side and very limited in the short term, meaning this week, with the amount that I would be exposing myself to the long side, because the energy levels just simply are not what you're used to, which again, I'll finish off with the last part, which I'll talk about. Yesterday was a 28-point range on the SPX. A week ago, Wednesday, 28-point range on the SPX. Back in October, the last day of October, only a 30-point range on the SPX. We're getting to where the volatility is no longer around. And that, together with how we are focusing on these credit spreads, the day's coming when we're going to break those ranges. It's coming. I don't know if it's today. I don't know if it's tomorrow. I don't know if it's next week. The day is coming when we're going to break those ranges. And like today, the range for today is 40, 45 points, 48 points. So, to again go into this and be aggressively expecting that the SPX is not going to trade in a range larger than 50 points. As of right now, 39.55, more or less around where we would open. We're only up about 6 points. Very lethargic. You got 4,000 to the upside and 39.10 to the downside. Now we know we've got our pivots 39.08 and that 39.88, 39.98 up at the top. But again, the range is starting to decrease. So the ability to really rely on those quote unquote unbreakable ranges is flashing a little bit of a warning sign that the day is going to come, they're going to break those ranges. And when it happens, it's just going to happen from a headline somewhere. It's going to come. The range is going to get broken. And when that happens, again, it's just one of those things. It's part of the game. But again, we're in a really tight range. So I would just caution you on getting into a spread and just letting it be. That's basically what I want to be. Monitor it, look at it, adjust when needs to be adjusted, and again, gravity is still to the upside, so I would still be looking for 4,000s and 𝐂𝐑𝐄𝐃 286, 285 during the course of this week. And I love you all. I'll see you in the chat room.